You think I should try to record it also? Since it's
Um,
recording?
might.
If it,
Hog's
um,
spoken before. Hog's on Discord before. I think I'm recording now. So welcome to DXD Token Working Group call number 2 on token comparison model. It says that I'm recording, so I will make sure to hit the stop recording button at the end there. Great. Let me share my screen for the presentation. And yeah, so today, going over some different token models here, just looking at the agenda here, a recap of the last call, looking at like some of the sources of value and solution requirements, and then looking at some of the model comparisons here, the continuous organization, which is DXDAO's current one, the bonding curve, YFI, Temple, Ohm, and GMX. I actually didn't get a time for Nexus. I was talking to someone about that, but yeah, so we'll go into those, and hopefully those provide some like insight into how how DXD can have a token model maybe somewhat similar, or take the best parts of those different ones there. And then I do want to make sure we have time for a discussion with this group on the current DXD liquidity, just so that we can try to think of a path forward there, which is more like short term solution that we should be talking about, rather than most of this, which is like more of a long term thing there. Okay, just like quick recap of last call. Last call was about where we came from, right? So DXDAO birthed in 2019. DXDAO launched in summer 2020. Bonding curve was good. It inhaled a bunch of ETH. Bad, did not drive value. Since May of 2021, the value has primarily been driven by the DXD buyback program, which has purchased 14K DXD, and with about 2,500 ETH. And there is a new program approved last month with additional parameters there. And that's kind of where we are right now with DXD. And we're trying to figure out how to find a solution to that. The source of value for DXD, like where does some source come from? Like what could DXD derive value from? So, first, obviously, revenue from DXDAO products, earning that, and somehow that benefiting DXD holders. There's DXD as governance power and governance 2.0, which we're working on now. And then you could even say DXD voting power with this DXD guild, that there is some value to DXD because it is governance power in DXDAO, or will be in the future. And the same that applies to DXD as a staking token in holographic consensus, right? Requiring that to be the way that you boost proposals does, again, provide some inherent value to DXD, because you have to acquire that to be able to move things in DXDAO governance. And then, of course, the additional source of value is the DXDAO treasury. So, right, I think this is 37 million. This was last night, so it's probably down a little bit with the dump today. But yeah, you can see that's the breakdown of the treasury right now: 22.4 million in ETH, 11.4 million in stablecoins, and then 3.2 million in other. And so yeah, and then so that's kind of where we are in terms of source of value. So I think a lot of what we're trying to figure out, right, is like how can this look at how can this translate into DXD value, right? And what are the parameters of that? And I think in this like other, you could also include like even things like DX Ventures, also even like the ENS names. Sky, you want to?
Oh, yeah, I was just going to add, because I guess other is inclusive on here, but there's, yeah, including Nimi and 5 other investments that, yeah, and there could be more. Those could deliver big returns, and I would think that most of that value, or all of that value, would actually end up going to DXD token. Like if one of those projects launches a token, well, some of them have tokens already. Eventually, there could be a distribution of tokens to what I believe would be DXD holders. Yeah.
Yeah. And again, it would be like, what is the avenue for that? DXDAO is creating some value, right? If Nimi kind of does well with its 10%, that'll be some value for DXDAO. Then the question is like, how does that get translated into DXD? And so I guess we can kind of push that into the general treasury thing, even though it's obviously much different than the ETH or the stable coins in the treasury. Yeah, and then so just going over the different models, we're going to start with the continuous organization here. I don't know if Augusto is on the call. He wanted to kind of bring it up. And this is just the existing model here. This is the mint and burn of the bonding curve. And so the idea being that the bonding curve itself would actually be the market price. And the DXD is supported by ETH in one side, that you're able to deposit the DXD into the bonding curve and redeem the ETH for that. And so I think I think the reason that it has not necessarily, well, the reason it hasn't worked is because there hasn't been enough revenue that has gone into the buyback reserve to support the price there. So it's very, very little. But I think the reason that we can kind of move away from it is really twofold. One, that model has these two separate treasuries. You have this buyback reserve that is like kind of over here that support the price of DXD, and then you have the general treasury that is for product development and everything. And I think it's tough to have like a token value with those two different pools. And then the second reason is because the ETH that's in the buyback reserve is just sitting there. It's not earning any yield. And so the model is really capital inefficient. Like I think at the minimum, you'd want to be able to like stake that ETH so you could get some yield on that. So I think, while the elegance of the model is like really nice, I think in terms of for DeepDAO's purposes now, it doesn't fit because it relies on like a two treasury model, and also because it doesn't it doesn't allow for ETH for other things besides ETH. So, and then Spicy, what do you? Yeah, it's about NEMI stuff. So that's the first one. The second is YFI. I think many of us might be familiar with YFI. It's a very the kind of story of the token is interesting because it didn't have like what they call it had a fair launch, so it didn't have a token set aside for the team. Obviously, this is like there was a whole with Andre. This was a whole thing, and there was a kind of like a minting to that group. But separately from that, like YFI was one of the few projects in crypto that was really like earning a lot of money over the bull market, right? It was getting a lot from fees, and they didn't have a way to translate this directly into YFI, and so they basically had like a buyback program that just directed funds from the revenue that they were earning from fees and directed a portion of it to purchase YFI. So you can see here, there's like 1,100 YFI purchased for $22.3 million, and I think the chart of YFI kind of like speaks for itself there, that like this has not been enough to support YFI as a token, right? It has decreased the circulating supply of YFI. It has given the YFI team, the DAO, more ability to spend YFI, but it has definitely not really driven value to the token itself. And now you're looking at the revenue that YFI is getting, like even before they just slashed fees to basically zero, you can see that like revenue was really, really dropping off. As we'll see later, a lot of this revenue is like token yields. And so when that drops off, there's really like no way now. And so now I'm not even sure like going forward how YFI will have to kind of come up with a reason or a new way of driving value for this. I guess what they did do a somewhat good job of managing the treasury. So they do have like a runway to fund, and they have a pretty aggressive team. So we'll see what they will do, but I do not think it's been like that successful as a token model. Yeah, and then moving on to I think the two that we want to spend like the most time with, which is Temple and Ohm. So I think just to get everyone on the same page, I think people talk about this like protocol controlled value. When I really just think of it, it's like putting assets to work. So you have assets that are backing something, right? They are the collateral for something. They are what you can redeem for it. But in addition to doing that, you can also be earning a yield off of those assets. This is like how so much of finance is structured. Like a bank just basically is like, yes, we can take your money because we can earn a yield off of it in some way, and we'll give you and we'll make the difference. We'll make our revenue off of that yield and the spread in that. So I think this is like a really important thing when you think about DeXDAO, and it's also been something that the projects we're going to look at today, I think, have innovated on, in the sense that they are these large pools of capital that are like going out there trying to earn yield, that are actually owned by the protocol itself. So the first one is Temple DAO. So Temple DAO is and yeah, I think collective yield farming protocol. Maybe that's like the best way to put it. It launched in October. Actually, just before that, let me read this from Connor. Yeah, buybacks like YFI aren't based on trading under some NAV, and increasing backing or treasury value per token are pretty weak as forward-looking revenues. Yeah, are so variable, right? And I think that's what you've kind of seen with, um, yeah, with this, that when revenues were good, it was something, but without that, yeah. Um, yeah, so these collective yield farming protocols, I think, are just basically you have these pools of capital that are going to go around and like they're not going to just earn fees. Really, what they're trying to earn is like yield from tokens. This gets into the whole like curve game, even getting into bribing, where you're trying to like redirect rewards to certain pools so you can get higher revenue from the pools that you're managing. And ultimately, like the way I think almost all of these work is you're yield farming with this big pool of capital, and then you're translating the rewards of of that yield farming or fees. You're translating that into rewards that you're issuing to your token holders that are staking. So with Temple here, you basically would stake your Temple, and you get a certain reward, consistent reward that is basically dependent off of the amount of value that is created from the giant pool of capital that's going around and yield farming there. So Temple, I think there's a couple others. Ohm is basically the same model, and there's a couple other of these there. But I think that's really like the core structure of these. And the reason it's relevant, of course, is that there is like a huge treasury like component, and there aren't that many like huge treasuries that are managed on chain there. So I think it's helpful to look at them and their models. Um, Yeah, and so this is just running through Temple DAO. Temple DAO calculates the growth in reserves from all sources. Based on this, it determines maximum harvest, i.e., the upper limit of reward tokens that can be minted and not dilute intrinsic value. The majority of the harvest is given to the stakers as temple staking rewards, right? This is the revenue they're earning from this big pool of capital going around in yield farming. Some of it is given to staking rewards. Some of it is actually given to the team to pay for development of the roadmap. And then some of the harvest is actually is sacrificed, meaning it's contributed to intrinsic value. So there's like three different things they're doing with the rewards there. One is they're giving it to temple stakers. Two is they're paying for the team for expenses, and then three, they're keeping it in the treasury for intrinsic value to grow. Um, yeah, and then Temple DAO, I think like I don't know, yield farming is not a sustainable business. I think that's like a theme we're kind of going to see a lot here. So yeah, I mean the price of the token fell below the intrinsic value, right? The value of the treasury, and the temple system is really only designed to give out temple um, in the system. Like that's the way the system is designed to incentivize things, is to give out temple. But minting more temple is not a good response to a price drop. So initially there was this thing they called Temple Defend, or maybe it was Temple Guard. I can't remember now. Which would purchase Temple at 60% of the intrinsic value. So that was kind of just like a floor that they had. And I don't think there was like much mechanism to that from the DAO. I think it was actually like down to the team just enforcing that themselves. But that's where it's kind of been for a long time. It was at 60% of the NAV, and yield farming is like not producing any revenue, so nothing's kind of really going on with them. And then I'm just going to share my screen. It is Defend. Well, they actually have, I think, kind of clever names, and so I was expecting it to be something more clever than that. Let me get this. And so then, yeah, they launched Temple Ascend last month. How do I share? A week ago. What month are we in? Sorry. um, Sorry, I've got these tabs open because I was trying to. Here we go. Yeah, so Temple they did this Temple Ascend, which is basically like it's called a liquidity bootstrapping pool, which the price of it changes because the weight assigned to the pool between Temple and Die changes. So it started out, I think it was 20% of Temple and then 80% Die. And that is set. I think it was, I can't remember the price it was set, but it's like 0.90. And that is above the market price. And so there's just an easy arbitrage opportunity to go in and like buy this temple or sell your temple into that and acquire it off of the market. So buy the temple off the market and then go sell it into the liquidity bootstrapping pool. And they've done this a couple times. I think they've had $11 million of it that has been purchased over the last couple weeks. And then, like, just to kind of see, and if Connor, I don't know if you have anything specific here, because I know you know, actually Hog too. I think was participating in this, the liquidity bootstrapping pool. But really, I think it was like almost like a shock to the system to get like a massive amount of Temple that you could purchase in kind of like some orderly way to bring the price up closer to NAV by using by using this liquidity bootstrap pool. So if you see on this screen, this is just kind of like a rundown of like the Temple ecosystem. I think it kind of shows like some of the things that they're doing. So they have you can see the market cap of Temple is like 134 million, and then I think the value of their liquidity positions are 150, I believe. Yeah, because you can see basically the price that it believes it should trade at, book value per token, is like $1.08 or $1.06, but right now it's trading at like 91 cents here. And so you can see though that Temple, like what they're actually doing with that big treasury, right? They've got liquidity provisions for Temple itself on all of these other stable coins. You've got Frax, DAI, Fei, just stables in general. And then so this is the pools of capital that are going around, like earning fees or tokens, right? And yeah, so I think Temple is like an interesting one in terms of how they kind of did this shock to the system to get it from trading. What was that? And I can pull up like a price chart here. That was at like 70 cents, and then it's kind of at like 90 cents through this like big purchase. You can see that. Yeah. So you can see there's a couple of these big shocks right here. This is right when the two launched, and that's a shock to the system, but it is like a pretty orderly move up. Um, yeah, so that's Temple. We'll get to kind of back this in a second because it's important, but just want to move to Ohm now. I have to share different screen. Yeah, it's because especially because Temple actually issues rewards in Temple that are issued at the intrinsic value price, and so the fact that they can acquire it at below that basically like it's a lower cost of capital for them than like minting Temple from its intrinsic value. Um, yeah, sorry, let me share this for. Yeah, and moving on to Olympus, the like 1000% me malicious APY Ponzi, whatever you want to call it. I think it was, I don't know, probably one of the most talked about projects in crypto over the last bull run, and I think it is like the third or fourth most forked smart contract on Ethereum after like Uniswap and like Compound or in some of the DeFi protocols, because there's been a lot of copycats of this. So there's a lot of things like talking about it. Everything about Olympus that I think is like worth talking about though has like nothing to do with the APY or like this whatever 3-3 staking mechanism that they had, like the game that they were playing. And I think you could argue they played it well in the sense that they really did develop a lot of hype. I think that is kind of separate from what is interesting to DXDAO. And yeah, I mean, Ohm is as I said, the 1,000% me malicious APY Ponzi, but it's also, has some of the largest yield farming treasury. It's close to $300 million in stable coins. I agree with that, Spicy. Yeah, and then, but unlike Temple, right? Temple, which didn't really have a huge price appreciation, so it launched, I think it was in like September, October of 2021, and it took in tons of funds. Temple did. They took in like over $100 million, and that people were excited to yield farm with them, so they raised a lot of money. But they didn't have this like huge run up in price that Ohm has, and so then as a result, like Ohm has basically completely crashed. I think it's down, I don't know, like 99 point whatever percent. Um, it's also a little weird because it's a rebasing token, so that's like based upon like kind of in the way they issued the rewards, and so that affects some things there. And again, I think a lot of these things are not exactly relevant to them, to DXDAO, but just looking at it because it is this like very very large treasury. And then as the price of Ohm fell over the last year and it like dropped precipitously, it has also faced the same problems where now the price of Ohm is actually trading below its NAV. They have not had like a buyback program, or there's no ability to redeem the Ohm for the treasury, but they do have this thing called inverse bonds program, which is kind of like sort of a buyback. And we're going to look at that now. Yeah, and so you could see, I think the treasury balance, they've got a lot of these things on here. But yes, you're seeing this screen of, oh yeah. So yeah, I mean, you can kind of recognize a lot of the similarities between how things are laid out here and some of like the terminology and ways we've been talking about the buyback, right? So the own market cap, of course, is a circulating supply. And even here, they have like some specific definitions on like what the market cap is, in the same way that we were getting into the weeds of defining what the circulating supply is there. And then you could see here, this is the current ohm price. And then they have what they're calling the liquid backing per ohm, which is essentially the value of the treasury per ohm. And so this is like what they're implying it should trade at, and then this is what it's currently trading at there. And you can see like the ohm backing, of course, is going to be affected by what the assets in the treasury are. And since they do have like some crypto in the treasury, obviously it's like affected by that. But they have these things that are called like inverse bonds, which I think are a pretty interesting tool. The way that they're kind of doing it, you think a bond is basically like, I give you a bunch of money up front, and then you pay me back over a couple of years or a period of time, certain amounts. And you could do things where you give something up front that maybe is not money, and you're paying a different amount back. And so here with this bond, what you're doing is you're basically lending out ohm, and then agreeing to, you're lending it out because you're going to get paid back in DAI in a certain amount that is guaranteed and will kind of happen. Now, the inverse bonds now don't actually have duration. That's not duration. They don't have a time element to it. They are just a discount to whatever the market price is. They're just a way of saying you can deposit ohm in here and get a certain amount of DAI back. And I think it's been, and that's why you can see here. Let me see. Sorry. Yeah, and I think these are kind of some questions that maybe we're asking ourselves here, right? How do these bonds affect the backing per ohm, in the same way the buyback, in the same way the Temple increased value per token holder? When you're doing these inverse bonds in the same way, they do also increase the backing per ohm, because you're doing it at below net asset value, or whatever you want to have. And they're not really like a price floor because they, as they're saying, they're more absorbing some sell pressure. Um, and then you can see here, can these bonds drain the treasury? And this is like a key point. The policy team decides how much ohm can be bonded in total. And I think that's important for Olympus that in there managing this big treasury. And obviously they're making a lot of decisions on where it goes yield farming and where it's deployed and what is the most efficient, what is the highest yield it can get. But they're also making decisions on like how to like kind of monetary policy decisions on how to affect the ohm market, and they're really doing that through these bonds. And so you could look at some of these here. Um, where are we? They have these inverse bonds, so it's actually not a discount now. I was actually doing it this morning, and there was a discount. So it would basically be like this would give you, let's say, $9.43, and then they would give you would deposit an ohm, which would be 1 cent over the market price. And so like these have been um, launched, set the bonds, whatever, underwritten. I don't know if that's the right thing, by the policy team themselves, and so these can be adjusted. But as I said, right now they're only doing it through this like discount. And I think like something I think DXD could think about doing is like kind of taking this bond structure, but like introducing a time element to it. So it maybe like takes a while to redeem whatever that value is. Okay. And then, yeah, I think that was kind of, and then I think just, are these bonds the same as a buyback? So they're similar, but notable differences, right? They're saying they kind of absorb sell pressure because they buy ohms slightly above the market price. They reduce sell pressure further because they increase the backing of per ohm, as we were talking about earlier. So yeah, I think it's a similar mechanism there, but a different way of like executing on it. Okay, and then back to the presentation. Um, Yeah, and so that's kind of Ohm and Temple. I think when you think about DXDAO and what are some of the differences, obviously DXDAO is older than these. I like to point out we're 3 years there. But one of the big differences with DXDAO is the treasury was raised to fund product development, not yield farm. Or the bonding curve launched, it was a way to like um, bring on people and pay people in order to build products, and then it's kind of morphed into different things now. But unlike those others, right, DXDAO's treasury experienced rapid appreciation in dollar terms since it's raised. So I mean, it was like probably, I guess, at most like $3 or $4 million probably raised in terms of ETH prices when they were deposited in, maybe a little bit less. And then the treasury got up almost towards 100 million in the bull market there. So other projects that have kind of in this yield farming, they did not have, they didn't raise the money kind of before the market took off there. And similarly, like DXD has not seen a rapid appreciation. It did not have an own moment where it like really mooned there. And I think DXL also has a mission. This is the difference from the other ones: mission to push decentralization, given its history and kind of the ethos of the project. And then the last big difference is there's no history of staking for DXD rewards. So all of these other systems, like a key part of the way that they're delivering value or a key part of their ecosystem is that there is like stake your asset and you get a certain APY or something in that native token. And so DeekStyle does not have that. I don't think you necessarily need it to implement some of these tools there, but I think it does maybe introduce like a little bit of like, I'm not sure how the models would be different if you don't have the staking there. So that's it for, yeah, I guess this part of the presentation before we get into like the DeepC liquidity part. I talked for a long time. Are there any comments, thoughts from others.
I think just something that I would say is that it's also, I think we touched on it on the governance call, that the something like the Temple LBP model is ready to go. Like balancer technology is there, whereas something like Olympus, even though the contracts are there, it'd probably take a little bit more time to fork it and sort of adapt it and make sure that it was all set to go and worked for what we wanted to do with it. So I think it's been mentioned in the chat as well, like some kind of hybrid approach might be also interesting to consider, something like shorter term and then something longer term as well.
Some of these examples, the LBP at a certain price, the bonds at a certain discount to market price, depending on what that assumed market price is. Bonding curves, true bonding curves like Avogadro and and I think yeah, Griff Green's a big fan of true bonding curves, but true bonding curves you need the buy and sell price to be the same. These are three examples of um, opportunities to come into and come out of communities, right? Like this is basically what like rage quit is in Moloch DAOs. Like people can participate, and if they don't like what's happening, they can leave with their value, which is a fair market value. It's either the value they put in, or if that treasury grew, then it's marked up, and then they can leave with that. Currently, because DXD doesn't have liquidity and it's undervalued, there is no it's not a fair opportunity for people to come in and out of the community based on what is happening in the community. And so the community can have its goals, but these all seem like mechanisms to like there was talk in the past about having like a low bid price to allow people to exit the community, but that was also an under market price. These all seem like different methods to give some or all token holders a chance to um, either get in or get out. Mainly in some cases it would be to exit. So getting into a community is a decision anyone can make. Getting out of a community should also be a fair decision. Just like in the public stock markets, you can always just sell your stock into the market, and you would hope that it is at a fair market value. That is kind of what the bonding curve was supposed to be, but the problem was the sell price never isn't where it was supposed to be. So we stopped that. So re-implementing a bonding curve, like Augusto says, is still an interesting idea if it's actually a real bonding curve, and it's not a real bonding curve. And I don't know how you can make it a real bonding curve. So having some other mechanisms that allow people to, it's basically this option to exit a community at a fair price, that you if you don't like what's happening in the community, that's like a key ingredient to like being able to program that opportunity in to a system, and a token system is an important piece of this. I know it's a little bit different than like how product revenues from things to get to that into that opportunity. That's other mechanisms that we need for that, for like Swapper and other products, and also the investments that DXDAO is making and how that token would flow. But if all those things were considered, I think the end goal is to achieve a state where people have that fair opportunity to come in and out of communities at a fair market price.
Yeah, I agree. And just to add on to that, like something that I've noticed, I've spoken to a couple of contributors in the last like week about this as well, and I've also mentioned that like I've tried to introduce like DXDAO to a lot of like friends and people in the ecosystem. For example, like Gov 2.0, I think is a unique kind of solution and something that could be widely adopted by DAOs. And I sort of open the conversation, try and you know, quote unquote shill it to them, and the first thing that comes up is, well, if it's trading at 35-40% of the treasury, something is wrong. I'm not touching it. Like, I'm out. Like, they pass before they even look at Gov 2.0. So, like Sky says, like, it's on the one side about allowing people to exit if they're unhappy, but also on the sort of like more forward-looking and positive side, I think also it sort of helps on the people getting inside. It sounds counterintuitive, but like, even though the price now is lower than say the treasury value, but I think it sort of scares a lot of people off that would potentially be interested in looking at the products if the organization was valued positively by the market cap. Yeah.
Yeah, definitely. And it's like, even if it like you don't even have the time to explain it to them, even if it makes sense, because it's just like yeah. Um yeah, other thoughts. I had some, we talk about DXD liquidity in a second, which I think is kind of relevant to this too. Um
Yeah. So, Chris, do you agree that those three kind of mechanism, like an LBP at a price that the Dow sets based on its full treasury or something, like it determines these prices, or a Uniswap like liquidity, like those are all mechanisms, and the bonds too from Ohm, those are all mechanisms to achieve what we're describing. And then the DXD liquidity and how much you can do in that fair environment is the like thing on top of it. But like getting bigger liquidity, well, allowing that fair environment to exist is the first part, and then you tweak things to make it so that the liquidity in that mechanism can be as much as people want it to be, basically in and out. Yeah.
yeah, and I think what Connor was just saying about the investor reaction to DXD, I think it is incredibly important that what we're doing here, whatever kind of model we come up with, whatever the conclusion of this, that one of the goals of that is to like break that perception of DXD and to try to like kind of shatter it. And maybe that's what kind of say, almost like provide a shock to the system. So I think there's something that, and this is one of the reasons I want to like talk about this on these calls, is this is like more of a short-term thing in terms of the liquidity and the price, which may be different than what things are going to be in long term. But I think it would be very good to have those things coincide so you can kind of almost like reintroduce yourself to the market in a way. So I guess just thinking about DXD liquidity, like it's obviously dwindled to almost like nothing lately. The existing buyback program, I think, is acquiring cheap DXD, but it's not inspiring confidence. I'm hoping, as I said, we can come up with a long-term solution. But if this would coincide with better DXD liquidity, then we'd have maybe this new shiny token model, and then there would also be like it, trading closer to NAV, and there would also be tons of liquidity at it, and that would be like, I think, a really great situation to try to like craft here. I originally thought that the resumptions of the buybacks in September, in August and September, with the smaller liquidity, would increase the DXD ETH price enough to be high enough to then deposit the DXDAO liquidity. And we had talked about that, right? It's like DXDAO itself providing liquidity. And that's also one gigantic difference between DXDAO and these other projects, is these other projects have protocol owned liquidity. They are providing liquidity on their own token, and that's like part of their whole system. So I think that's something that we should also kind of be thinking about here. And I think that my original thought was, oh, we'll like the DXD ETH price will increase as buybacks come up and there's less liquidity, and then we can just gradually deposit more DXD liquidity once it's at DXD liquidity once it's at a comfortable enough place. But yeah, I just don't think that's like happened, and we should be. I think it's really important that we figure out how to have more liquidity and better price action as this like token model gets agreed to and unveiled. So I'm trying to think of like what is like more of a shock that we can have to the system rather than a gradual one. And so we had just last week or earlier this week successfully done a test trade on cow swap for DAI for ETH trade, um, and directly from the DAO. And I think we could do the same thing on mainnet, and we could do the same thing for DXD. And so I think we want to consider that, because that would be maybe something where we're doing it, or like an LBP would be like another shop. And just to like think of this, like, where we are right now is we have 80 ETH left in the GP relayer that's executing executing DXD buybacks in the same ways we've been doing the last year and a half. Those order sizes are like six or seven ETH, and those are kind of consistently. So those will go on for another couple more weeks. But we already have passed this new authorization for 500K. And I'm like wondering if there's a plan that we could come up with to basically just like use all of that to place a bunch of orders on CowSwap, and kind of spicy soup point, not relying on the previous ADTV model, but just coming up a way of like submitting these orders again on mainnet, which I think is pretty important. So with CowSwap, you don't have there's no relayer or al liquidity needed, but you can do market orders, but then you're relying on the price at the time of execution. Or you can do limit orders, but but these are filler kill. So they have to be, if it's like a 50 ETH order, they have to be all in one go. Doing this would mean go through the multi-call 2 scheme, so it takes 15 days. And so Dave and I were talking about this. Dave's in Berlin, so he's not here, but we were talking about like coming up with a new text and process for how to execute these through CowSwap and then submitting them, I think, on mainnet. And so like, what would these orders look like? Knowing like the conditions we have here of basically it could be like a market order, but this is like 15 16 days in the future, people can manipulate it, and then we could do a limit order for that. But like, yeah, what would we think would be like the best way to try to like implement that?
It's not one of those two, but my suggestion might be notice auction, where we put in the maximum price as maybe the market price, and then if the demand to sell DXD is much higher and people want to exit in size, then we sort of get it cheaper. Then like the price that we acquire at can be lower than the market price. So it's not like a limit order that can just get wiped out, and then you're sort of like, well, we acquired some cheap DXD, but now it's gonna drop anyway. Whereas notice auction, like, you can set that maximum price so that you're not gonna get manipulated and sort of overpaying. But then if people want to sell a bunch more, then you're getting a lower execution price for it, which is always good.
I am not sure if the DAO can interact with Gnosis auction. I think it can, but we have to like at least test that. I'm pretty sure it can, but we'd have to figure that out. But that would be another way. And I guess neither, maybe Gnosis auction would, but like this, if we just spray, like I'm just thinking, like let's just spray these orders over like some amount of period of time as like a not shock and awe campaign, but to do something to kind of like move the market a little bit while this is going on with like DXD token working group, and then we can move to insert DXDAO liquidity. I think like all those coinciding like together would be a very good signal. Alternatively, I think like the liquidity bootstrapping pool, the LBP, I don't like saying that name. It's kind of hard to say. I think that would also be like another shock to the system and would kind of do it in one fell swoop. That would kind of be outside the way that we've conducted the previous buybacks, which have kind of come through governance proposals. We'd have to figure out how we set that up. I think that would be possible. But I think they're like different approaches. Because like I actually think the LBP is like a great model to like, with that, you don't need the ADTV spicy. Because like the reason you're doing the ADTV is basically to just like dollar cost average into these, right? Spread them out over time, so you're not like you're getting it like more efficiently. But if you're using like this LBP model, like that's basically like kind of you're absorbing that in a much more like gradual. It is like a curved way. Cool. Um, and then, are there any thoughts on like DXD liquidity? I mean, I think probably most of our thoughts are like it makes sense as long as it's at a certain amount, and so yeah. Is that amount like 0.3? Is that 0.35? Like, does it stabilize a little bit? Should we kind of go gradual? Yeah. And any thoughts on DXD liquidity? Sky, I think this is maybe a good question.
Yeah, I mean, the treasury is in the current state because there was a gradual plan to sell ETH as it went higher and higher and higher, and it's positioned with this dollar tokens. And yes, that is now considered being isolated as dollar runway, but ETH is also runway as it was for the first year of DXDAO. And if ETH is undervalued and we have extra, and we're like, let's say we do um, reductions in spend, we do a bunch of things to reduce spend of the DAO. Some of that savings, which could be invest in other projects and stuff, could also be used to buy back DXD.
Yeah, I mean it is essentially buying ETH, right? If you're instead of using ETH to purchase DXD, you're using dollars from the treasury to do that. I don't know, what are we at? Like 14 something. I think it's a pretty good time to buy ETH, but like I always think it's a good time to buy ETH, and it could.
It's like, well, which one's more undervalued? And if they're both undervalued, what is not undervalued is dollar stables.
Yeah, I mean, you can look at I don't buy ETH anymore. I buy DXD because if I want I think Hog was actually the first one to say this. It's like, when I want my ETH exposure, I can just like get DXD, which is going to have that exposure while also having the upside of like getting to NAV. Just keep buying. That's the only thing, man. My dad did text me.
So if ETH is $400 and like DXD is trading at $20 or $30, like we could buy all the DXD with dollars stables.
Yeah, I mean, I think it's such a good idea. That's why, like, going back to like, it's hard to convince people to buy DXD, and like maybe it is because like everyone on this call like kind of gets what DXD has been going through, and we're like confident in the future. But like, it is such a great trade because you just get like, I mean, I don't know. I think we're all probably pretty bullish on ETH too, right? And you're thinking in a year and two, like, what's ETH going to do? It's going to explode. And so if that's like the DXD treasury that has that, like, it's translating that to DXD is it's just a good trade investment. But I'm not here to literally preaching to the choir.
I think on the liquidity point, I think like you said, it's difficult to sort of think, well, we need liquidity on one side for people to be able to exit, especially if it's underpriced. But on the other side, we don't want to sell DAO owned DXD cheaper than what it's worth and sort of let external third parties like basically arb against the DAO treasury. So it's like difficult. I think stuff like limit orders and LBPs sort of do that. They provide liquidity like heavier weighted on one side and not so much on the other side. But I'm not sure to your question of like when to put in more liquidity. I'm not sure when the answer is for that, but I think to be safe, I think the heavier weighting on one side in the meantime until maybe like you said before, maybe like group consensus, like as soon as everyone starts to sort of think, okay, well, this seems like a decent point, just play it by ear, maybe. I'm not sure.
Yeah, actually, Connor and I were talking about this, like, group consensus, that I do actually think DXDAO has had pretty good instincts on like the group consensus on when to sell and when to do like even buy DXD, right? Obviously, I think it was very successful on when to sell ETH. And that wasn't like anyone made a decision. It was just like everyone's like, well, this is like we should be selling ETH. And later it was like, well, we should be selling more ETH because the price is kind of at that. And I think that's kind of the same thing that will happen here. Is it we can kind of we see that we know that it's somewhere in the distance. We can't really see it now, but yeah, I mean the limit order, like just doing it from one side is like obviously better. It just does take that's a lot more management. Is right the thing you having. That's why you have like a market maker that is going to spread orders around and make it a little bit there. So I think with the limit orders, like using them with CowSwap is a really it's just a cool thing and a good idea I think to do to and be it a little bit different than the buyback structure we've been doing through the GP relayer. And so I think we just think about how we could actually do those. And then the other two options, I think, for more like liquidity that's still just the one sided like liquidity is, as you said, Gnosis auction. And I think the liquidity, the LBP, Balancer's LBP. Yeah. Yeah, I mean, we have the basically because it hasn't been done yet on like mainnet. So I think that's part of the reason. It's just like we have to do a couple like test orders, and I think there is something like as you said, like the Gnosis auction could probably accomplish the same thing with like a little bit more efficient. Um, thank you, Hog. We could do this earlier if we got two, if Spicy and Hog. We should do these a little bit earlier. Sorry, Sky on the West Coast. Yeah. I think that was it. Did I have like one more? Yeah. Yeah, I think to the point about like the medium and the long term, like the Temple DAO LBP is a medium term or short term fix, right? That's kind of like their shock to the system. And then their long term way is still the same one they had before, which is they have rewards that are distributed in Temple token. And DXDAO doesn't have that. And so even if we do the LBP, there will need to be kind of some way of that. And I do think a lot of the, like, I've kind of always thought from the beginning that like the model, that the bonding curve is this elegant model and that the real way to try to like fix it is how can you basically combine the treasuries and then have like the treasury itself supporting DXD. But then that requires a lot of the management that we were just discussing about, like looking at the NAV and calculating that. How do you calculate that for NIMI, and how do you calculate that for other kind of assets that maybe are in the future or ones that are not very liquid, like Swapper, even looking at that. And then if you are allowing redemptions at NAV in some token, presumably is that ETH, is that like DAI, and whatever token you are doing you're issuing this rewards. I'm sorry, you're doing the redemption in. You're gonna have to keep a whole bunch of liquidity of that token, and so like managing that, like and understanding like, okay, well, it's basically like you have to prevent a bank run. Is kind of like the short way of doing it. If you have redemption of something at net asset value in one token, you have to be able to manage the liquidity to make sure you can deliver redemptions in that token, even if you have like somewhat illiquid assets. Yeah.
I think for us, it's like if it was like either ETH or some kind of stable, and we chose like a stable that we're more preference aligned with, and obviously still have diversification within our stable stack, but maybe keep a little bit more. Say it was DAI, for example, like you just sort of have a bit of a heavier weighting for DAI, and of course you still need management to ensure that it's always enough in there, but like you could do it a little bit less frequently. Like I think of course we've got Nimi and like a lot of the DX Ventures stuff and Swapper, but I think like for the medium term at least, DXDAO's treasury is probably still going to be quite like focused around those two broad asset classes of ETH and some kind of stables. So
I think it is only important for the looking component, because if you want to get people like excited about DXD, it's not just, hey, look at the treasury. It's like this treasury is going to increase in value in the future, not just from like deployment in these things, but also these other like investments that basically like DXDAO has meant. So even though now it's not important for like the treasury calculation, I think it is important for trying to like attract in investors.
right, yeah, makes sense.
Yeah, because obviously there's no value. I mean, it's not like there's any contribution to NAV now, right? It doesn't even for swapper there. Cool. Well, we are 29 here, so I think this is like a good place to call it. So we're meeting in 2 weeks. I think I can do. We'll try to do earlier, maybe an hour. An hour before the community call, or I think, and we're having daylight savings time coming up. That's going to mess things up. Yeah, but we'll do 2 weeks. I'll send out something. I'll pick a time this week or by tomorrow, just and set that up. And then for that, I wanted to just like start thinking about like, okay, well, how do we get some of the ideas that we've talked about here, short term, medium term, long term, and how do we like start putting that on like a page and reacting to it? So hopefully that'll be like the first instance of that. Like more like super open to ideas, feedback, if anyone has any like little elements that they want to introduce. But yeah, as I said, I think there will need to be something like short to midterm, and then like the long term thing that we're thinking about. Cool. All righty. Thanks everyone for joining. I need to make sure, Sky, how do I make sure I record this?
Stop it, and there's like your window to save it should pop up right away.
Stop recording. There it is.